Finance Minister Enoch Godongwana's budget speech delivered few surprises this year and follows National Treasury's continued commitment to fiscal sustainability. This is to be expected in an environment of low economic growth, high unemployment, and pressing social needs. The minister acknowledged that increasing the overall tax burden on the economy could well be counterproductive. He has highlighted the fact that past increases in the personal tax rates have not generated the expected revenue flows, showing that the limit has been reached on the current maximum marginal tax rate of 45%. In recognition of this, most of the tax relief given this year has been in the form of inflationary adjustments to the personal income tax brackets and rebates, providing much needed tax relief to South African taxpayers, particularly those in the lower to middle income groups. High net worth provisional taxpayers need to realize, however, that if they have assets over 50 million rand, they will have to disclose those assets at market value in their 2023 tax returns. The tax relief measures have not only been aimed at individuals, but will also be extended to corporates. The proposed reduction in the corporate tax rate from 28% to 27% announced in last year's budget will now become effective for corporates with tax years ending on or after the 31st of March 2023. This means that a company with a December year-end, for instance, will be subject to the new 27% corporate tax rate from the 1st of January 2023 to the 31st of December 2023. The reduction in the corporate tax rate will, however, lead to a shortfall in revenue for the government. So coupled with the rate reduction will be the limitation of tax deductions in respect of interest incurred by corporates and a limitation of the assessed losses that corporates can utilize each year. On the retirement reform front, some very welcome amendments have been proposed, particularly for members of retirement annuity funds with more than one contract in the same fund. These members will be able to transfer one or more of those contracts to other retirement annuities, as opposed to having to transfer all of their contracts at the same time. There have also been some developments on the two-pot retirement system that was proposed by National Treasury last year. The two-pot system will allow members of retirement funds to contribute a portion of future benefits to an access pot while contributing the balance to a retirement pot. Members will then be able to repeatedly access the benefits in the access pot while having to preserve the benefits in their retirement pot until retirement. National Treasury released a discussion paper on this last year, and it will hold public workshops this year to discuss the practicalities, legislation, and future implementation date of this proposal. Some interesting changes were also announced by the South African Reserve Bank. In particular, that South African residents can now use their single discretionary allowance to participate in online foreign exchange activities, provided they don't use their credit or debit cards to do so. Residents will also be able to lend or sell their authorized foreign assets to other residents, subject to local tax disclosures. And they will also be able to invest authorized capital in excess of 10 million rand per year through offshore trusts. In addition to the changes applicable to South African residents, the prudential limits for institutional investors have also been harmonized. This means that the offshore limits for retail assets under management of insurance companies, retirement funds, and collective investment schemes will now be standardized at 45%, allowing the potential for greater offshore exposure for investors in these institutions. What is clear from Budget 2022 is that the Finance Minister has had to finally balance competing budget priorities, and it is hoped that the tax and economic growth initiatives announced in the budget will help improve the economic livelihoods and well-being of all South Africans. Despite all the positive initiatives being proposed, we cannot ignore the dire financial and social realities that most South Africans face day to day. It has never been more important for South Africans to assess their finances, get their debt under control, and review their savings and retirement plans. Our financial future is not only in the hands of the finance minister, but in the hands of each and every one of us. Thank you.